Hello and welcome to the special coverage of what appears to be an unprecedented bloodbath across markets globally. And we are tracking, of course, very closely the Indian markets here at The Hindu. I'm Kunal Shankar, Deputy Business Editor, The Hindu, joining you all from our Chennai headquarters. Just to give you a quick overview of what's been going on today, Indian shares opened sharply lower today as concerns over a global trade war and growing recession fears in the United States triggered a stock market rout, not just here, but actually beginning on Wall Street last week and in other major Asian markets, Japan, South Korea, to be very specific, last week. And we'll be talking about this with our colleagues who are going to be joining me shortly from Delhi and as well as Bombay. The Nifty 50 declined 5% to 21,758.4 in pre-open trade as of 9:08 a.m., while the BSE Sensex fell 5.29% to 71,379.89. All 13 major sectors declined. The broader small caps and mid caps lost 10% and 7.3% respectively. We must remember that this is on the back of what was a major rout of the Nasdaq, the worst two-day performance in 20 years, where on April 4th last week, 2025, it was down 11.44%. So I'm now joined by our colleague Lalatendu Mishra, who joins us from Bombay, who's been carefully watching all the stock markets, the troughs and peak, and he's been tracking this for over 20 years. Lala, thank you so much for joining me here. If you can begin by just giving us a sense of what's happened today. I mean, this is rather unprecedented, particularly for India, isn't it?
Yeah, absolutely, Kunal. Hello, everybody. Welcome to this show. There are nervousness building up from Friday. I know people calling up saying how the markets will behave on Monday morning, and in fact, to the expectation, market today opened with a gap down 5%, opening. Then there are value buying. So today, as we are talking, the Sensex and Nifty is about 4% down. As you
Right.
know, domestic institution and mutual funds, those operate through direction from the top.
Right.
They may say we are value buying, but the market has recovered from then. One thing that is very clear that nobody wants uncertainty. This
Right.
uncertainty and the reciprocal uh, tariff, then the retaliatory tariff by China, that has unnerved the markets, and obviously the global recession. That is because once a trade flow cannot, has been hindered completely. That is what market is nervous about. And to keep things in perspective, today, obviously the market has really grown in size. The 4% fall may not look big, but it is substantial.
In terms of
Um,
value terms, you mean it has grown very
Absolutely,
substantially,
absolutely,
right? Right, absolutely.
absolutely,
If
absolutely.
you can probably even give us a sense of that, Lalatendu, because from when we began really after setting up SEBI as an institution, as a regulatory body, if you can give us a sense of how big the Indian stock market has grown, and what this 5% actually means in value terms, perhaps.
I will give you a perspective. When, as a young reporter in Bombay, we used to write about BSE. NSE was insignificant that time. When
Right.
100 points fall, that used to make very big news. Today, when
Right.
we don't write reports if the fall is worth 1,000 points. So the markets
Right.
have really gone because of the involvement of the retail investors, the demat account that has been opened, the the technology that has been enabled, replacing the paper share to demat share. And now, putting things in perspective, the biggest fall that happened so far in the Sensex is that COVID, the COVID fall that was
That's
in
right.
March 2020. The fall
Right.
was 13.2%. Okay,
Right.
and
Right.
compare it's now is 4%. So I know this is time to panic, but there are bigger falls. The
Right. I see.
next bigger fall was in 1992 when the Harshad Mehta scam broke. The fall was 12.7%.
Right.
Nearly 13%. Then
Right.
then the next nearest fall was in 2004 when the election. They defeated the election.
Right.
the NDA election, and the market fall by 11%. So these are the last three falls that we have seen before. Now I talk to brokers, I talk to market analysts. The trouble is not over. It may fall further because the uncertainty is going to deepen further.
Right, right. So, as you say, this isn't quite unprecedented. So, we should actually correct that and sort of explain that to our viewers. You've really succinctly put in perspective just how it's been since 1992, after which we sort of formalized our stock markets and regulated. That's around when SEBI, as the Securities and Exchange Board of India, was really sort of given teeth and began regulating the markets much more carefully after the Harshad Mehta scam. So, as you pointed out, really a historic low was about 5 years ago when COVID hit. When you said it was about 13%, if I'm correct. So that's a major point. And after that, this appears to be the next major fall. If I can just bring in Ashoka Mitran, who's also in Bombay and has also been tracking all the events closely, since the news of the retaliatory tariff, the reciprocal tariffs announced by US President Donald Trump in Washington at that Rose Garden event, where he put up that sort of a slate board where he announced the tariffs, and India was given a number of 26. There was, of course, this confusion whether it was 27 or 26, which was clarified later. Ashoka, I remember talking to you right after that when we had a live, and you had specifically mentioned about how India was rather muted. The reaction from the Indian markets were rather muted, and in fact, you had spoken about how the pharma industry was quite upbeat because it was given an exemption at that point, and they were rallying upward. So, if you can just give us a sense of what's happened now, and maybe in comparison to the last week, and if as Lala Tendu mentioned, there you both have been speaking to analysts and sector experts, what they're talking about, what is to come. Ashoka.
Hi, to the viewers and the team. So the last time we did this, it was in a very short notice, and we could not really gauge what was happening in the markets. But this gave us a little bit time to sort of talk to people, and what the sense we are getting is, even before the Trump tariff actually kicked in, for the past 6 months, markets have not been doing great. So this is on a lower base already. So I spoke to one head of research of a top securities company, and he was telling me that the level at which we should gauge the market is something around 22,600 Nifty, right?
Right. Uh-huh.
Markets. So this was until Friday.
So this is for perspective to our viewers, and particularly because, as Lala Tendu was pointing out, we have
this was the first rise after the 6-month dip.
After the 6-month dip, okay.
There's a 6-month dip and then the small rise. The first rise is always what I was told. See, I am no technical expert. The technical expert told me that this is the first rise after a long dip is important, and that is around 22,670. And if markets don't dip below that, then this year is salvaged, is what he told me on Friday.
Right.
And this is, should I call this coincidence that Monday opens much lower than that? So we have breached that safe level. So the sentence he told me verbatim was, if we hit below 22,600, this year is finished, is the word he was told me. So yes, if the analysts were to be believed, then this year is going to be muted. Rest of the year is going to be muted, and the effects are going to be huge. Yeah, so Monday was muted. Last Friday was not great. Thursday and Friday. Now I think after China coming in, we know that this is going to be a full-blown uncertainty.
Right.
Another analyst also says 22,000 is the, not 2600, 22, somewhere between
22,000,
22,200 is the space technically. Q4 estimates earnings are also going to be out, and
yes, very
we
soon.
will see further effects
week,
on the fundamentals of the company, how this tariff hits them, and depending upon that, markets will react to that also.
Yeah, right.
So we will have to see where this goes from now on. But sense seems to be that upwards doesn't seem to look where it is. It looks like it's going to be downwards.
Right. I'll maybe perhaps come back to Lalatendu again on this crucial point that he spoke about, the rise in retail investors. And we have done a bunch of stories on our pages and on our website, which have reflected this sort of a huge dip in mutual fund SIPs, the sort of investment plans that are majorly advocated by those who invest in the markets, particularly for retail investors, people like you and me, majority upper middle class folks who are salaried, who sort of want to get more out of the stock markets instead of fixed deposit returns from banks. What does this particularly mean for them? This sort of volatility, because you in fact reported about how there's a shift to gold as a safe haven and other instruments, government bonds. So what does this mean to them?
Actually, this news, this uncertainty and the market rout is very devastating for them. They have come in large number post COVID.
Right.
And if you see the demat account numbers have gone up to 14 crore. Out of that, these retail investors are bulk. They could be 10 or 11 crore retail investors.
That's huge.
And they have
Overwhelming.
supported all this big rally that our finance minister, even our big guys from finance ministry talking about, we have de-linked ourselves from the foreign markets. We don't care about FIIs or FPIs flow, that our market is enough, our own investors are enough to keep it going. Obviously, the new SEBI chairman corrected. He said we need the FPIs as much as we need them. So for these people who borrowed money, RBI was always very concerned about people taking personal loans and putting money in the stock market.
In the stock market,
and you ask
right.
the banks where. He told personal loan, we don't know if you're taking your for personal travel or anything, wherever you are utilizing it, we don't know. But now
Right.
it is corrected. To answer your question, this is very devastating for them. Most of the time, I've seen people watching their smartphones, from wherever apps there, they once upon a time they were celebrating their portfolio,
Right,
they have become
right,
1
right.
crore, 2 crore, playing on margin trading.
Yeah.
Now it is very
18%,
scary for
12.
them,
Yeah, yes.
and they don't know what is going to happen.
Right. And that's rather devastating, as you pointed out. Ashoka, I remember your story about the financial, the foreign investors sort of getting out of the country in droves, and then of course there was a sort of a very mild return, if you will. How does what signals does this send out? Of course, the rout across markets is much more in Asia and more in the United States expectedly, and we have sort of largely thought that India would once again be this sort of a middle path safe haven from these extreme sort of volatility seen in other markets. How are people reacting about foreign investors returning to India?
So foreign investors usually the April following the March. There's no correlation. This was a data point I had seen recently, that the April following the March is usually muted. If your
Right.
March was grew more than 6%, the return was more than 6%. April is always within 5, 1, 2, sometimes even lesser than that. It's always been like that, 5, 6.
Yeah.
This is a report by Axis Securities. They had put it out. So so April is always, but on top of that, we can see that FIIs selling had reduced in the past couple 2-3 months.
3 months,
But
yeah.
that doesn't mean that this will stop, because we are looking at it's simple charts, right? We are looking at a sharp downturn and a small upturn.
Yeah.
A small upturn is still from the context is much bigger.
Yeah. Right.
So if your number falls from 100 to 40, and if it goes to 50, it's still a 50% loss. For it
Right.
to go 50, it'll have to jump 100% to go
Right.
back to 100. So arithmetically, this jump
May
restoration
not
is
quite
not possible
happen.
very quickly. Forget
Yes.
other global details. Arithmetically, this is not a very, if you just look at charts, it's not very likely. And that
Yeah.
there is a lot of uncertainty around the world now. Who's going
Yes.
to come back? Who's going to go for a bilateral treaty and all that? Now, within
Yeah.
that, I think the one big surprise to them that they were all running to US, and now that US is all the recession probability indicators are up on US. They're
Yes.
all expecting a recession. Simple thing for the viewers is some time ago Mexicans were paid what a few dollars as wages for a $7 burger. If you're working in a burger joint, you get $100
Yeah.
or much lesser than that as wages, and you can
Yeah.
make it a $7 burger. Now you've said Mexicans can't come in. I'm not going to import. It's going to be completely low. No American would be ready to work at the cost of a Mexican, at the
Right.
cost a Mexican would charge, which
Right.
means you will not be getting $7 burgers. Which is, although
Right. Yeah.
as imperfect as it can be, MACD index is something that foreign newspaper American financial newspapers track. I mean, as an economics guy, I am not very pro such recession indicators, but it is an indicator. And
Yeah.
if your MACD burger is going to cost higher just because you say imports are not going to come in, and FIIs are not going to be happy with a high inflation,
Yeah.
and you're importing inflation because you're producing things that was cheaper to import.
To import.
So,
Yes. Yeah.
so now your inflation's up, and if your inflation's up, and also the fact that growth might also be hit,
It. Yes.
which is
Absolutely.
sort of a stagflation, tending to a stagflation kind of a scenario. And no
Yes.
foreign investor would like to stay in a stagflation market.
So it's
So
actually like what you're pointing out is that these Trump tariffs are quite counterproductive. We, in fact, had an editorial titled American Retreat, speaking about how the US is the largest importer. And this is going to significantly, at least temporarily, hit consumption demand in the country, because it's going to jack up prices of commodities. Because if imports are going to cost more, then it's going to, by most account, be transferred to the end consumer, which might lead to consumption demand. Then again, as you pointed out, the sort of the vicious cycle of the investor sentiment being down because of that could reduce economic growth. Of course, we've also pointed out that this is going to have a cascading global effect, because countries are already probably beginning to look at their export strategies. Most countries, India in particular, for instance, it's surplus entirely. The top 5 countries with which it trades, the US is the only one with which it has a trade surplus, and this is going to be quite devastating for exporters from India. So we've sort of pointed that out as well. And we do know that bilateral trade agreement, the negotiations are ongoing. If I can bring in Shapparno Ghosh, who's joining us from New Delhi, who's been tracking things from there as well. I remember Shapparno also reporting, giving a little bit more detail after the Trump tariffs were announced, about sort of sectorally which ones would be the most hit. For instance, marine products would be the most hit, because 35% of India's market for marine products is the United States. You sort of wrote a good listicle of all the sectors that would be hit. Satparno, how is New Delhi in general reacting? I do understand that the Commerce and Industry Minister Piyush Goyal is to speak at an event in Bombay later. But we were talking about how the reaction in Delhi has been rather subdued post the Trump tariff announcements.
See, Kunal, the fact is that India is largely following the trajectory that has been followed in other Asian countries. Let's say, for example, Japan as well. Japan, was the first to admit, yes, we will have an impact, but you know what, we are going to negotiate and see if we can actually wade through that. India, on the
Right.
other hand, that obviously, as you rightly pointed out, that we have a surplus there. But the fact is that India is, it is adopting, let's say, a very cautious approach right now. It's like, okay, we'll hold on, we'll observe how things are going to pan out, and thereby we're going to exchange with stakeholders and everyone, and then, we'll see where we can take it forward. Obviously, the bilateral trade agreement, it has been, something that we have been discussing for long. This might actually take the center stage again. this might actually
Right.
take the center stage again. So this is where things are headed now. But again, it's a very cautious approach. It's like, okay, we'll wait and see how things pan out.
Yeah.
Obviously,
Yeah, so actually, I just also wanted to talk about a little bit about the Asian market since you brought it up. Japan specifically, when it opened today, it tumbled 225 points, nearly a 9% rout. The Nikkei there, Hong Kong's Hang Seng is down again 8%. South Korea, on the other hand, even temporarily halted trade
already.
because of Trump tariff concerns. So and those economies, of course, are much more intertwined within the US, market. The exports, Japan particularly, its overwhelming exports of automobiles are to the United States. China, of course, its overwhelming EV exports are to the United States. EV batteries are to the United States, aside from all manufactured goods, really. What's happening there? Just give us a sense of what's happening in the Asian markets today, and really the on-ground impact. Right? Often when we speak about markets, we sort of forget that this does eventually have a sort of a macroeconomic influence and impact, especially when it is so volatile for so long.
Hmm.
So if you can maybe
I'll start
start
off.
with what's happening at the Asian markets, yeah.
Yeah, I'll start off with Asia. I mean, if I were to really put in a headline, Kunal, let me just say that Nikkei 225 dived 8%. 8%.
8%,
And it was
nearly right. Okay,
nearly,
yeah.
yeah. And it so happened that, now markets are closed. If you look at the local time, now markets are closed. But
I
it was
see.
during intraday trade today that it was almost touching a 52-week low. 52-week
That's
low
huge.
is significant for an index in Japan. In Tokyo, if it happens, it's something that they would be very apprehensive about. So all of
Right.
that has happened. Now, if you compare that to Shanghai, Shanghai has been relatively stable. Obviously, it has fallen. Now, when I say relatively stable, I'm just comparing it to what happened in Tokyo. So,
Right.
the reason for that is that perhaps because China also mired in geopolitics and everything, they kind of expected that this might happen. So obviously the impact is felt. There is a lot of export that happens, but then they were kind of prepared that okay, this might happen. So the impact is not as massive as you and I might have expected it to be. So
Right.
Japan, obviously, what has also dampened the sentiment, perhaps, is the commerce minister and the prime minister coming out and openly admitting. It might be actually one of the more fewer countries who have admitted that hey, we will have an impact. Coming
Impact,
out and
yeah.
openly admitting that we will have an impact. So that
Which is
has also
significant.
dampened, the sentiment in the market there. So that is how it is actually panning out. And is it a one-off? I do not know. Shanghai seems better prepared, as I said. They have
Yeah,
experienced
China has,
geopolitics and
yeah.
all. But Tokyo, this might actually be a first of its kind. So this is where
Right.
things get really complicated.
Right. So I think that's a broad overview to our viewers of what's really going on, and we really have another about 4.5 hours to go before markets close here, and we will get a better sense of just how the markets reacted. And as all you three of you have pointed out, this is really probably just the tip of the iceberg. Just last week, right after the pharma indices did well because they were exempted from tariffs. The very next day, President Trump indicated that there would be tariffs on pharma products as well, on his Air Force One sort of longish conversations that he generally tends to have with reporters and others. So this is still, while it's a huge shock, there's every possibility that this could get worse. So with that, on a sort of a quick take that we gave, that it was possible to put together for our viewers here, I would really like to thank Lalatendu Mishra, who joined us from Bombay, Ashok Mitran also from Bombay, and Saptaparno Ghosh, who joined us from Delhi for this overview. We will keep tracking the market volatility, its economic fallout on the broader economy, on not just India but the world. Thank you so much from me, Kunal Shankar, here in Chennai. Bye for now.